Hi everyone, Alex from Summerhill, just with another quick video update. In today's update, we'll cover some key changes to tax and super from July, excess superannuation contribution notices, changes to the GST payable on advisor service fees charged via an investment or superannuation account, and June investment distributions. So, starting off with a reminder regarding some key changes from July. As per our past video updates, personal tax rates are set to change from July. If you're receiving income above the tax-free threshold, you should expect to see an increase to your take-home pay. We will discuss the investment options for your higher after-tax salary at your next planning meeting, if applicable. The concessional contribution limit, which is the maximum amount that can be contributed to super from pre-tax income, will rise from $27,500 to $30,000, while the non-concessional cap, which is the limit for contributions from after-tax pay or savings, will jump by $10,000 to $120,000 per annum. The higher pre-tax cap will help top tax rate payers to reclaim some of their lost stage 3 tax cuts and grow their superannuation savings faster. The superannuation guarantee rate will increase from 11% to 11.5%. While most employees will receive the additional SG contributions, those under a total employment cost arrangement may have their cash salary reduced to offset the increase in SG payments. Small business owners should review their systems to ensure they are meeting their obligations to their employees based on the increased rate. And clients with existing salary sacrifice arrangements at 1 July 2024 should review their salary sacrifice arrangement to take into account both the increased SG rate and the higher concessional contribution limit. And finally, for those withdrawing the minimum annual pension from their superannuation income stream, minimums will be recalculated in July. So we'll be in contact with those receiving the minimum in mid-July to just confirm what the new amount will be and to review your cash flow strategy. Moving on to excess superannuation contribution notices. So with many of you lodging your tax returns over the past few months, just a friendly reminder to contact us if you receive any excess concessional or non-concessional contribution notices from the ATO. Penalties for exceeding superannuation contribution caps are less punitive compared to when they were first introduced. However, there are often other consequences that impact contribution planning strategies and accumulated superannuation savings if exceeding the cap. We've observed instances over the last few years where small excess concessional contributions were notified and disregarded by the member because the personal tax liability that arose from it was relatively minor. But the additional consequence is that if doing nothing, that excess concessional contribution may then be considered an after-tax contribution if left in the fund, and if that's ignored, this could potentially cause a premature triggering of a 3-year bring forward rule and just have some significant unintended consequences for your future planning strategies. So this is an easy mistake to make, and it's just in your best interest to just contact us if you do receive an excess contribution notice, and we'll ensure the appropriate action is taken considering your longer term unique planning strategies. So moving on to changes to GST payable on advisor services fees. So some of you may have received notices from a superannuation or investment platform regarding to some changes in how GST will be payable. Superannuation and investment platforms have been claiming a partial credit from the ATO on behalf of members for the GST charged on advisor services fees. Historically, these credits have been applied to member accounts as a reduced fee. Going forward though, The ATO has advised superannuation and investment platforms that they can no longer claim this credit on a member's behalf, and the full amount of GST will be charged on all advisor services fees from June 2024. The GST credit means members have effectively been paying less than the agreed upon amount with their advisor. The benefit of being able to apply tax credits to reduce GST paid on fees was always a bonus, but unfortunately it is no longer allowed due to the ATO ruling. So from June 2024, the amount charged to your superannuation or investment account for advisor services fees will increase by the amount of the GST credit. In short, the standard 10% GST will apply, and this doesn't change any arrangement or any previously agreed advisor fee amounts. If any of you have any queries about this, please don't hesitate to reach out to us. And finally, just a reminder that unit prices for managed funds drop on the 2nd of July after the payment of year-end investment distributions. So you may see a drop in the value of your portfolio from 2nd of July until when that distribution is paid into your account in around mid-July. So that's it from us for today. If you have any comments or queries, please don't hesitate to get in touch. Thanks.